All right, good afternoon, everybody. Patrick here, Prime Ag. Welcome back to another weekly webinar. Weather's cooling off here a little bit in Wisconsin. Kind of feels like college football season. So definitely fair time. Chad was at county fair last week, and now they're doing their state fair this week. So quick little webinar. We got the USDA report out later this week as well. That's going to take a lot of the market's attention. Crop ratings yesterday came in, adding support to the market in here today. Last week we sent out a soybean fence, 1430 put, sell a 1550 call on short dated options. I put the arrow where we sent the text, no particular reason other than we ran up $2, straight $2 off the recent lows. You can see that there's some resistance in there. So this isn't trying to be like, hey, there's just no perfect sale. The point here is the market had a really nice move up, and we figured there was a good time to get some price protection in place. As we all know, the market fell back down, at which point some guys bought back the sold call. That leaves their top side open with the put still in place. With the market at 1430 here today, we're sitting at the money. Other guys on the dip decided to close out everything. And then what you can do is set kind of a mental stop if the market breaks. Close out. Otherwise, on this push up, you can reward with the rallies, or just put the gain in your account back into your pocket. So, ultimately, the point of this was we had a really big move up. Okay, there's enough uncertainty out there. We thought these were some pretty good levels. Get a floor above $14, and then that sold call, up near the top of the range. If the market ran up instead of down, we could live with making a sale up near the recent highs. So this is working out well. Again, a lot of flexibility with getting this into place. USDA report this week. Here's kind of the estimates. Corn yield 176, soybean yield 51. So it's trending lower. These aren't the official estimates, obviously, from the USDA. This is just kind of a poll from analysts and experts out there. So you'll see ending stocks. Corn obviously gets reduced a little bit. Beans a little bit of a reduction. Wheat actually going to come up is what everybody's thinking. So with the crop ratings in here, you kind of got to sit here and ask yourself, okay, if we get a bullish report, can beans reclaim the $14.80 to $15 level? I didn't get that marked in the chart, but basically where those two spikes are right in the middle of the chart, and where we did our option position here on the recent run up. Basically, if we clear that level, that's a target that the bulls are probably going to be looking for in here. If we get a bullish report and a big drawdown in ending stocks or yield, on this report on Friday. And again, if you're sitting here with the sold call, it's fine. You might have some margin coming up, but again, a break above 1550, you're going to have beans sold there. We can live with that here in the near term. On the corn side of things, a little bit different. If we can reclaim the 650 level on a bullish report, that's what the trade's going to be watching for. On the bear side, though, South America is still competing with us, on offers. Beans, we are the cheapest right now. Corn, we do have some competition. So that 650 level is really going to be key coming into the report or even post-report. And then for spring wheat, that's really kind of the one to follow right now. Again, bullish report. If we get, we had the crop conditions in here fall down or get reduced, and then, if we see some drawdowns in yield here with the hot and dry weather, can spring wheat reclaim the 950, even the $10 area, at which point, it's probably worth looking at making some sales in here. So just a couple thoughts here before that USDA report, and we'll be back with everybody on post-report to do a webinar. So, real quick in here, just as we go through, protect revenue. That was the whole point of that soybean text we sent out. There's good values to have. We could get a price floor above 14, which we thought was pretty attractive. And again, if the market would have gone straight up, you're making a sale up at near the recent highs. Knowing what we know now, that's something we could live with. Next point, be flexible. Again, market dipped in this particular case. There were some things that could have been done to move around that position. But regardless, even in our report prior to that, calls look pretty cheap. We talked about buying some calls for a quick flip, and then basically within a few days you're looking at buying puts again. So volatility is out there. Be flexible when it comes to making some of these marketing decisions. Again, USDA report this week, that'll set kind of a lot of the tone here, I think, going obviously into the next month, and of course everybody will be focused on yield. Again, when you get our text messages, and those are only going out to our report subscribers. So if you're a paid subscriber, you're seeing those messages for these recommendations. If you have questions, you're not sure how something works, you need help managing the position, get your brokerage account opened up with us, and then just give us a call. We're more than happy to walk you through it. So we will see you guys again after the USDA report. We hope everybody has a fantastic week, and make sure you hit the like button, subscribe if you haven't already to get notifications, and we appreciate you tuning in.